Welcome to Momentum Monday. Today is August 23rd, 2020, and Apple is already a $2 trillion company.
Yeah, it's been selling too soon, but let's go through this. This is kind of exciting because I don't know what's on the other side of this.
Exactly. I mean, exciting is the right word to describe it.
Yeah.
It's kind of funny that we're starting to see some of the elements that we kind of saw in the late 90s. And by that, I mean
all of them.
that big companies would just go up significantly higher after announcing a stock split. I mean, stock split in theory doesn't change anything. It just increases the number of shares in a company. But we all saw what happened with Tesla. I mean, Tesla is a huge company. It's a $300 billion company. It went up 50% in a little bit more than a week after announcing a 5-to-1 split. Apple, which is the biggest company in market cap in the world, in the history of the world. I mean, after they announced that 4-to-1 split, it also just kind of went parabolic, basically. It just accelerated higher. And if those two companies with this size, if they can move like this, I mean, anything is possible in the market.
Well, we've seen anything is possible. If you look at Overstock or Novaks, I think we were starting to see this in small names. So I think it actually started in these things, in NVAX. And so there was a couple post-COVID explosions in stocks. What'd that go from? If you really zoom in, that went from, right. So those are the three. Wayfair.
They're more than three, but
the big ones are this NVAX and Overstock.
Yeah, I mean, anything related to COVID just has gone crazy, and some of those vaccine stocks are now starting to come down, and they're already up 50% or more. The big tech just continues to get bigger, and
I've never seen anything like it, obviously. So I'm taking profits and trying to find other breakouts. So this week, to me, a couple that looked interesting. I've been talking about them was Stone, STNE, the fintech companies of the rest of the world. For EAGS.
Yeah, I mean, the connection is a little bit slower, Howard.
Okay, let me put it to my phone. Hang on. So aggravated.
Okay, are you still there? It seems like we lost you. Let me text him.
Can you hear me?
Oh yeah, I can hear you now.
I don't know. Sorry. So PAGs, I don't know. We're going to have to deal with this bad reception. I have something with my house. So PAGs, the other one that broke out this week, Ivan, was Elastic. I mean, they have earnings this week, but I've been following this forever and pretty long. I mean, if you zoom out there on monthly,
Yeah, monthly is too much, but weekly, yeah, definitely.
So you can see the earnings, if it can hold here above earnings and surprise, I mean, it's one of those, they power everybody's search, right? So Amazon's had this huge kind of cloud on the stock, part of my joke. But I feel like we're starting to see, as much as I see froth, and a lot of it makes sense to me, right? You got the government pumping so much money, interest rates low, but at the same time,
Yes, the dollar as well.
Yeah,
Even
the
though it started to
dollar.
bounce, overall, it's been in a pretty steep downtrend for the past few months.
And that's been helping the foreign stocks, I think.
Any stock, I mean,
Any stock.
the
Okay.
stock market in general is the perfect protection against inflation. It's better than anything. It's better than real estate, or historically. So it's kind of normal to see a rise in stocks in general when the U.S. dollar is going down.
Sorry, it's not normal.
No, I'm saying it's normal. It's
Yeah.
normal.
Yeah. And then if you look at the other things that like just line up in the bull's favor is China stocks keep going up despite the talk of, we're going to, so if you look at Alibaba.
Yeah, Alibaba definitely setting up near all-time highs.
Yeah, just breaking out. Tencent was supposed, we're supposed to be stopping WeChat, right? But that's just acting beautifully here. It's just normal, right? Like it's
last week,
that's that news is public, right? Like the news that we want to stop China in its tracks is public, right? The rhetoric is out there, and yet these stocks are ignoring it. So, I keep selling down stocks, but I keep finding new ideas, to keep me invested. It's a really weird situation, right? Where it's like I'm trying to sell down FANG, but I'm finding all these like baby planets. Another one that looked interesting to me is Farfetch, right? Which is kind of like an Amazon of high-end retailers. So it's already had a great run, but this is a company that at 10 billion is really kind of come into, vogue with COVID, because all these luxury fashion brands need all of a sudden, with the malls closed and with, kind of the world closed, they need a way to aggregate their customers. And so all of a sudden, the one kind of area of retail that was doing well with luxury now finally needs a digital kind of Etsy. So I think Farfetch is something that we need to keep our eye on. This could be a beginning of a major trend where all these exclusive type brands can use like a Farfetch. So it's another one to keep an eye on. And I know it looks crazy because it's already up 400 or 500%.
If they're that exclusive and have that strong following, why would they need a third party? Why can't they just use their own website?
Because they don't have their stores. Well, yes, LVMH for sure, but I'm talking about brands that had stores in Soho and LA, and but to get access to all these batch consumers from China and Japan, all the wealthy consumers, because stores are closed, you might as well order online. So Farfetch is the place you go to trust to see the most exclusive. It's more just a branding / store play. You're not going to go to Etsy to buy $10,000 pair of shoes. You're going to go to Farfetch, right? Because you know that you trust this is the hand-picked best brands in the world. So it just feeds on itself as like a vertical that didn't matter, kind of like Chegg for textbooks. So I think we're starting to see some like longer term trends in consumer behavior because it's already been 6 months take hold. So I think this high-end one, I mean, if you look at Wayfair and Restoration Hardware, like Wayfair has become the place that people trust, right, post-COVID, right? So you can see that move, from 20 to 140, and people were like, including me, were like, oh my God. And then it just kept going through the breakout to all-time highs. So I'm starting to, try and find other industries where that's happened. And so retail is going to be a massive one, especially if COVID persists for another year. These are behaviors that just aren't going to change. Anything else that you're seeing?
So one big thing that I'm seeing is the negative divergence between price and market breadth.
Okay.
And I'm going to show you a couple market breadth charts. So typically, I mean, tops are a long process. And for a top, there are two ingredients. One is lack of buying, so fewer 52-week highs, which we're kind of seeing lately. Leadership is becoming thinner, but that process, as I said, can last a while. And the second one is heavy selling. We haven't really seen the second one yet. So I wanted to show some charts here. So here's the S&P 500. Here's the number of S&P 500 stocks at 52-week high. And you can see here as it kept making new highs, the number of new 52-week highs has kind of stalled and even pulled back. I mean, that's a classic negative divergence.
That's the main reason I'm selling like my Apple and Facebook, even though, like I said, normally I'd buy those breakouts, but they're not being supported by breakouts at scale.
Yeah, the thing about, I mean, as I said, we're not really seeing an increase in 52-week lows. I mean, we're seeing some increase in new 10-day lows, but 52-week low list is kind of empty. So let me just show you on a short-term time frame. Okay,
It's funny that we just talked about Etsy, and now Etsy is being shown as an ad. Is that?
I was totally related.
That's creepy. Sure. Yeah.
And as you can see, I mean, there is a little spike in new 10-day lows, but all of those spikes, they were kind of buying opportunities. So all of those negative divergences in a bull market, they tend to resolve
in the favor of the bull market. Correct.
You just set the rotation, and the odds are that is going to happen again, but we never know. And until I see an uptick in new 52-week lows, is kind of, I mean, why bother trying to catch the next?
No, and that's what the main point is. I think I keep explaining to people that I'm like being defensive, but there's another stock that shows up, you know, from
exactly. So definitely here, small caps are kind of underperformed in the past few weeks, but we've seen so many times that anytime either the QQQ or the Russell 2000 would look weaker, they would just reverse roles. So I wouldn't be surprised if at some point next week we hear some news about an advancement in a vaccine or something like this, and then small caps just take off as QQQ like consolidates a little bit after the big run.
Yeah, this is like, there's never been a bigger wall of worry, but there's also never been a bigger wind blowing behind stocks right now. You have unlimited capital, you've got declining dollar, you have low interest rates, and you know the breadth may not be what you like, but you have to give the benefit of the doubt to the bull. So I just, for people that just, there's something for everybody. Like I said, even though I was selling Apple, I was like elastic, and Spotify looked fantastic. Like Spotify looks fantastic. It had this massive gain, you know, out of a base, and digested it beautifully, right? Like, you know, and the numbers are staggering, 30 million new subscribers, right? Like, you know, again, like, and then if you look at Shopify, you know, there's going to be tons of competition. There's just no doubt, from Farfetch to, I've seen like 5 startups launch with better, you know, Shopifys and raise a lot of money because Shopify isn't perfect. But look at how it's held those gains, you know, off the bottom. So, you know, maybe this is some kind of big top being formed, but it's not going to be like March where we just go straight from all-time highs to all-time lows. I mean, I think volatility is still pretty high. You know, the VIX is still above 20. So, I don't know, there's still a lot of reasons the market can go higher. You know, if I look at that Tesla chart, Ivan, go back to the Tesla chart. There was that spike back that 1794 day where it just opened at new highs and closed, you know, at the lows of the day back in, in July, back in July.
Oh, okay, in July.
That spike there. There was, I thought that was a top, right? And it sure started looking like a top until the stock split, right? Like it's like 1999, and I'm like, okay, this is. I remember I was saying, like, unless this is 1999, that was a top in Tesla. But guess what? This is kind of like 1999 on rails. So what I'm kind of excited about is taking some of my money out of, you know, I never owned as Apple and Facebook, and rotating it into what could be the next. I think a lot of this money will come out eventually, if we don't get bad news and start trying to speculate in the Alibabas and the 10 cents, you know, in the 200-300 billion or 50 to 100 billion dollar companies, and the $10 billion companies that could be $100 billion companies. So that's what I'm kind of starting to see, and I just wanted to share that with you. And then
Yeah.
what other sectors are you seeing? So China is strong.
China's definitely strong. Solar is still holding well.
Solar, I talked about, is going.
China
Yeah.
setting up some of them. I mean, they're consolidated
Yeah.
gains for solar. Like most of us play like 10 stocks in the sector.
Yeah.
And I'm sure we'll probably see more IPOs in the
Gaming
sector.
stocks continue to do well. Activision.
Yeah, gaming is kind of holding.
Nintendo, NTDOY.
Yeah.
Take-Two just bought Dots. Yeah, they're just, you know, there's just a lot of strength.
Oh, yeah. Trying to break out, definitely.
Yeah, so games, gold is still doing well.
Well, it's kind of pulling back a little bit, but yeah, overall
But considering that run, it's doing phenomenal. Yeah, so there's just a lot working. Like, so I don't see the bearish case unless we have a repeat of March, but we're not going to have a repeat of March because we already know what the market did. And so the market's pricing all this stuff in. So it's going to have to be something from page 10. And I don't have an idea what it is. You know, maybe an implosion of the dollar, maybe a spike in interest rates, but it's hard to predict those things, and we're not seeing signs.
It's really hard for those things to happen overnight. I think it will be a multi-year process. It's not going to be.
Yeah. So I think green light still. I'd like to be more cautious. I have been a little too cautious, but I'm finding too many good ideas, Ivan, to pull much more money out of the market.
As you say, it makes more sense to continue to ride the trend than to try to catch the next 5% pullback.
I've been a little too cute with Apple, but I keep finding new ideas. But I still own Apple. It's slowly dropped out of my top 10 as of this week, and my Twilio, Spotify, those seem to continue to be big positions of mine. Twilio's digesting the gains pretty well, I'm really, so we'll see here. I'm long, it's a top 10 position. I don't know, like, there's reason to sell that. It's just breaking out again. Just had another great quarter.
Yeah, it's incredible. After all those so-called bearish setup, I mean, we had a breakout below the 50-day. It didn't matter at all. It just reversed higher, and now new all-time highs. Like all those.
Well, I think what's happening, Ivan, is recency bias, right? Like if you look at the rollovers, people are thinking, oh, we're going to have another March, right? So everybody's trying to like not have that, because in March, that's going to affect people for years, right? Like how many days in a row were we limit down? You didn't have a chance to panic, right? So I think what's happening here is
I think we lost you again.
Can you hear me?
Yeah, I can hear you now.
Okay. So I think what's happening, Ivan, is like because of the March recency bias, I think people are rushing to get out. It's the first sign of trouble, right? And then what happens is stocks aren't rolling over and people are rushing to get back in them. So I think there's a lot of, scared money in the market right now still, including myself, right? Because of that recency bias of March, it's hard to stay 100% long, which I haven't been.
Yeah, I think sector rotation will continue to dictate the tape, and we will see corrections, but not so much in the indices themselves as in separate sectors, as we saw it in biotech for the past few weeks. I mean, pullback the 50-day moving averages are kind of normal. We also saw a slight pullback in software.
Took off again.
The 50-day back near all-time highs, and last week we saw a little bit of pullback in semiconductors. So all those pullback, they just continue to be scooped up, and the market continues to correct through sector rotations, which is healthy in general. And until we see a spike in new 52-week lows, I think the odds are that buying the dips is a better strategy than trying to guess the top.
Yeah, I mean, the market's trying to suck you into bad habits, right? Like they're breaking out and breaking out and breaking out. So I get it. Like that's why having a strategy works, right? Because you can't. I've been second guessing a strategy that actually works for me because I don't want to be the sucker buying the last breakout. And sometimes you just got to let your systems, trying to adjust for my age and my risk profile and all the other stuff that I do. But I've been a little too conservative. The one time my strategy is really ripping, and happens. You overthink your strategy. It's not easy out there. All right, everybody, have a great week, Ivan. Thanks for your help here.
See you next week.